Hello everyone, today we're talking about Bitcoin. So let me tell you why this time it's different than the rise we had in 2017. So by now everybody should know what Bitcoin is. Bitcoin is a digital cryptocurrency. So all that means is that it's a form of money that people have decided to put online. And so you can buy it, you can hold it, you can sell it, you can buy things with it on PayPal now. So basically it's just another form of money. And why is this time different than the rise in 2017 when prices went all the way up to like 20,000 and then crashed all the way down to like 4,000, 6,000? So that was like a huge spike and then a huge drop. This time, things are a little different. So if I turn this around, I'm going to explain to you why there's a difference between who's buying the money right now, who's buying Bitcoin right now. Is it the smart money or the single people investors like you and I? So let me turn this around. As you can see here, we have the Bitcoin wallets with over 1,000 Bitcoins breaking through their all-time high. So what this means is that, well, if Bitcoin is priced at 1,000 and we have 35,000 per Bitcoin, let me just put it here real quick, 35,000 times 1,000, that makes, well, you put a comma here, you put a comma here. That's everyone with more than $35 million in Bitcoin. Well, that's only going to be a couple of people, right? So mostly the institutional investors. I'm talking hedge funds, banks, people who manage like a huge amount of money. So that's what it means with like Bitcoin whales or the people who have over 1,000 in Bitcoin. And if you scroll down, where do I have this graph? Here I have the graph. And you can see here that this number has been steadily rising from like all the way from here to here. This was 2013. Then it kind of like, went flat for a while. Then in 2017, people bought a bunch of it. So down here you have all the dates and everything. And then up here in the year 2020, we have the most big people holding Bitcoin ever. So what this means is that the institutional money starts to flow into Bitcoin, and that's why we've had this rise all the way up to 40,000. Now, another thing you can check is what the regular people are doing, the regular people like you and I. And if you go here to Google Trends and you just type in like Bitcoin or BTC, which is like the code for Bitcoin, then you can see as well the interest over time. So if we start in October, we can see here that it was pretty steady, rising a little bit, rising a bit more in December, and in December to like pretty much 2 weeks ago in January, we had like this huge uptrend in buying from regular people, right? And so we hit this high in January 11th, 2021, and oh my God, you're gonna have to forgive me. Let me look this up real quick. BTC to USD. And if we just look here at the history, I bet that this is going to coincide quite closely. So as you see here on the 8th of January, yeah, this is in Polish, but styczeń is like January. So 8th of January is when it peaked. Here you can see it was like pretty close to peaking in the 4th, peaked like completely on the 8th, and interest slowly draining off towards the end of the month. What this means is that as we're going over time, the interest starts to go down, but how come the price is staying pretty much stable, right? Because let me show you this. If you zoom out now to the past 5 years, okay, sorry guys, I've switched to the Bitcoin because the BTC chart had like a huge irregularity. But as you can see here, if you zoom out to the past 5 years and you go to like 2017, you see here that that's when the interest peaked. And that's when we had it hit 20,000. And over here, the interest is like kind of high. It's gone all the way up to where it was like half of the before, but it starts to go down. So if you then zoom in on like the past 30 days, for example, you see that slowly the retail investors are losing interest. And that's usually a sign that they start to sell. But because all these extremely wealthy people keep buying and buying and buying and buying, this is where the smart money is. That means that the price is staying pretty stable. And as you can see here on the chart of Bitcoin, yeah, if you zoom out, you see it's just pretty much going ballistic here. But if you actually zoom in a little bit more, usually when people start losing interest, the price goes down. It's staying pretty steady for the past month, and that's because of all these whales who are coming in. And what do I mean with whales? Well, I'm talking banks, I'm talking hedge funds, I'm talking people who manage hundreds of millions or billions of dollars. So if you go back to me, let me tell you the next thing on the list. So I've already explained to you the difference between retail and institutional. So last time, the buying was driven only by retail investors. That means people like you and me. This time, it's driven mostly by the institutional investors and a little bit by the retail investors. So that means the smart money is starting to flood in. That means that the prices are going to kind of have a bit more stability behind them, because when you have people who are holding that much of it, they have very predefined like ranges of where they're going to sell and buy, and until they hit that, they're not going to do pretty much anything. So institutional money coming in, that's different this time. Now let's go over to the regulations, which are also different this time. So let me show you first what's happening in the UK. So if you go here and you look at the UK and you just do like UK crypto regulations and you look at the news, you have here UK ban on cryptocurrency. Treasury calls for feedback on approach to cryptocurrency and stablecoin regulation. What else do we have here? UK finance minister opens consultation on regulating crypto. So as you can see here, pretty much everyone in the UK starts to like really put a focus on regulations. And initially this might seem like a bad thing, and let me continue. If you look here, the SEC in the US starts to sue Ripple, and we can see here that pretty much a bunch of exchanges decided to delist Ripple. And that means that people can't trade it as easily as they used to. That's obviously a bad thing. That's also explained why Ripple has remained depressed, even while the price of Bitcoin and other altcoins like Ethereum have just soared. So if I look here, just XRP to USD, and we look at a chart real quick together. Let's pull up any chart, it doesn't matter which one, this one maybe. And we go over to like, I don't know, you can see here, this looks like the past year or so, right? Yeah, pretty much. So as you can see here, it like peaked when Bitcoin started peaking on, well, I don't know what month this is. This is November, December. So it started peaking here. Then the SEC sued them, and it's gone all the way down to where it used to be before the big pump began. So the second that regulations come in for the altcoins, it pretty much crushes their price. They're pretty much down and out of the game. Now, you might be wondering why, say, this time the regulation is actually in favor of Bitcoin. Well, it's actually not that difficult to understand. So Bitcoin is right now the biggest one. They've got a market cap of a couple $100 billion, and they're pretty much too big to fail at this point is like the closest term you could think about it. And the difference is that while Bitcoin is so big and you would think it's actually a threat, but it's actually not, because Bitcoin can pretty much only serve as a store of wealth. It's not going to replace currency. And what the governments are afraid of is that their currency gets replaced. Since Bitcoin doesn't have the functionality needed to act as a currency, but it can act as a way to preserve your wealth, or if you just want to hold it in a safe asset, Bitcoin can do that for you. And because they're so big and there's so much money flowing into Bitcoin, the government is actually incentivized to regulate it, because if they just try to shut it down and, nobody actually controls Bitcoin. Bitcoin is out there. It's like a beast of its own. So the government can't really come in and say like, okay, shut your servers down. Like, it doesn't work like that. Whereas most of the altcoins, they're based within like a couple of people who own most of them, or they're run by specific companies. So the government can actually come after those. They can say, hey, we don't like your product, we're shutting you down. And that's pretty much it. That's the end of the story. But since Bitcoin's already out there, and because they don't pose a threat to the currencies of the governments, they have no incentive to shut down Bitcoin specifically, whereas altcoins do actually pose a threat to how currencies work in the world and could start to replace them. So altcoins do actually pose a threat. The governments are incentivized to shut down altcoins, and with Bitcoin, they're incentivized to regulate it, because what happens when you regulate an industry? You can start collecting taxes on it. So you think they're just going to sit there, see the price go up to like 800 billion, soon it'll be at 1 trillion, and just not tax that? I don't think so. So let's talk about what it means for Bitcoin to be decentralized. Now, I said that Bitcoin is a beast of its own, and what that really means is that it's a decentralized currency. So let's understand what a centralized currency is. A centralized currency is one that is in control by a group or like a government. For example, like the US dollar is in control of the US government. The euro is in control of the European Central Bank, as well as the individual countries have permission to print within reason as much of it as they want for their own economies. So a centralized currency is one where a governing body has control over the supply and the demand of the currency, right? So they can either like raise interest rates on it, they can pump in a bunch, like they could just print like crazy if they wanted to. And there are many reasons why governments would enact those measures. Usually it's always to support the economy in the correct way at the given time. But what that means is that, they control the money. So if you're holding, I don't know, $100, and all of a sudden they decide, you know what, we don't really think that we want to protect the cash that people have. We're just going to print a bunch because we want to like build all kinds of railroads and whatever. Well, they're going to put a bunch more money in circulation and your $100 is going to start being worth less. Now, in the developed countries, that's not such a big problem. But if you look around and you see what's happening in countries like Argentina or Venezuela, just to list a couple, you start to have hyperinflation. So your money pretty much becomes worthless. Now, I'm not saying that's going to happen in the developed countries, but it is starting to slowly happen around the world at an accelerating pace because governments start to print out of control. And with Bitcoin, there's a limited supply of it. And unless somebody goes out and decides to start buying up Bitcoins, which I guess they could do, there's not really any central person who can control the supply of Bitcoin. That's what it means to be decentralized. That's why people like it. So, that being said, let's move on to the next point, which is that banks in the US now have zero reserve requirements. Let me turn you around. So, as you can see here, on March 15th, 2020, the Fed reduced the bank reserve requirement all the way down to zero. Now, what does that mean? It means that the banks can make as much money, ad infinitum is the Latin term, in as long as the Federal Reserve approves it, they can print as much money as they want. Now, back in the days, you used to have a reserve limit of 5% or 20%. And so what that meant was that the bank actually had to have 5% of the money they loaned out, right? So let's say they had $5 actually sitting in their vault somewhere. They could loan out $100. And that's how banks basically work. The more they loan out, the more like individual profits they have, right? More loans means more profits. And the banks are basically a margin business. And that means that they try to sell as much quantity as they can because their actual earnings on each individual sale is relatively a low profit margin. So by dropping it to zero, that means that the banks start loaning out money like crazy, as much as they want. Like, I don't even know where to begin with that statement. If you just have them giving loans to absolutely anybody, right? Imagine you have someone who's like, I don't know, their credit's horrible, etc., etc. They just walk in, they're like, hey guys, we want a loan to take out like a $40 million mansion. Well, the bank has absolutely no incentive not to give them that. So that means that they start to give out money to people who really shouldn't be receiving such vast sums. So then you have another risk to the economy. It just keeps getting better and better, doesn't it, guys? And now let me tell you why exactly Bitcoin itself doesn't pose a threat to the world's currencies. So if you look here at Visa, well, Visa transacts about 1,700 transactions per second, right? That's like 1,700 people swiping their card or like making a purchase using a Visa card. So that's pretty much like the global average, right? You have a couple other producers, but you get an estimate of like how many are happening per second, right? Visa is, I believe, the biggest one. Maybe MasterCard is. Anyway, they're both around 1,700 transactions per second. Bitcoin, guess how many transactions per second they can do? Well, 4.6. 4.6 transactions per second, while Visa does 1,700 transactions per second. So as you can see, Bitcoin can never replace currency. It's just not fast enough. in order to like actually buy something at the store, you would be sitting there waiting like 15-20 minutes just for your card to actually be read by the little machine. So I mean, Bitcoin does not pose a threat to currencies. Let me say it again. If you look at Ethereum, the second most well-known one, Ethereum can do 30 transactions per second. 30. Visa, if we go back, is doing 1,700 transactions per second. 30 transactions per second. Is that a threat? Absolutely not. Ethereum 2.0, 100,000 transactions per second. Is that a threat? Yes. That starts to become a threat. So they have motive to slow down Ethereum 2.0 and regulate it. And when I say regulate, I mean kill it. With Bitcoin, they only have incentives to regulate it, not kill it. The government likes it when there's an easy thing that's just accumulating a bunch of money and they can just tax it and take a share of that. They love that. So then if you go here and you go to pretty much the fastest one that's on the market now, you have Ripple. And Ripple can handle 1,700 transactions per second. Now, as you see here, there's a couple of newer ones which can do like a little bit more. But basically, if you do 1,700 transactions per second, you're doing the same amount as Visa, which is one of the biggest like card transaction processors in the world. I think everybody knows Visa, so you can get an idea of this. So is the government incentivized to shut this down? Yes, they are. Are they incentivized to shut down Bitcoin? No, they're not. Now, let me move on to the next point on my list here. So I explained that the banks have zero reserve. Now, let's talk about the money printing. Let's talk about it because it is absolutely astonishing. So if you look at this graph, it goes all the way back to 1995, 1990, 1995. You see a nice straight line, 2000, 2005. Here there was the big market crash. As you can see, there's a small jump here. Roop, very small jump. And then sometime later, they decided to do that again. And then we're getting to the coronavirus and it jumped up by like 20%. So if you look over here, it jumped from 16,000 to 20,000. All of a sudden, just like that. And then let me make this line a little bit smaller so we can look at the past 10 years, for example. So this starts here then, March 15th, 2010, January 20th, 2020. I mean, look at that spike, guys. They start to print stuff like it's going out of style. They're printing like it's going out of style. And what the M2 money stock is just basically all the money that people have in their checking accounts and their savings accounts. So this is not looking at like any investments or anything like that. This is just literally the amount of money that people have in the bank that is ready to be spent at any moment that they choose to. So if you have all of this money flowing into the economy, well, how do you expect prices not to rise at this point when you have so much coming in? Well, I can tell you why prices aren't rising, because if you look around the world, the inflation rate has stayed pretty constant and there hasn't been any kind of shock to the system. And the reason for that is look around you. Everybody's staying home. Nobody can go to the restaurants. Nobody can go out to the shopping malls. Nobody can spend their money besides on a couple of things online. But you know, online shopping gets boring as well after some time. And if you actually look at it, let me show you the Etsy stock. Etsy is a common online platform to buy things in the US. So if I just look up Etsy stock here, I'm typing with one hand, it's a bit tough. Etsy stock, and we zoom out to the past year. Well, look where they started, $38. They're up 428%. So e-commerce is absolutely flourishing, but you got to remember, e-commerce is it's not insignificant, but in the grand scheme of things, it doesn't make up the whole economy. So if you have then, nobody is driving, for example, so not spending on gas. People aren't going to the shopping malls. They're not spending there. People are basically only going to groceries, shopping for little things here and there on Amazon, but no one's going out and splurging because there's absolutely no point to. No one's going out to eat. And that's why, even though the money is being pumped into all these checkings and savings accounts, because it's not being spent right now, we're not seeing the effects of the inflation. Had this happened during a time where everybody was out and about, you would see prices start to go ballistic. So, all of that being said, let me flip you back around. This time, try to get my whole face in the image. So, that being said, is it time to invest in Bitcoin? Well, I'm still on the fence. So, while this all sounded overwhelmingly positive, the fact remains that depending on what the governments do, depending on how hard they start to crack down on these alternative coins, that's going to impact Bitcoin as well. And until we have like a clear guide on how exactly they plan to regulate Bitcoin, people should be cautious. It still remains a highly speculative asset. I think that if you wanted to put, this is the general advice going around, which I would agree with it. If you want to put 1 to 3% of your net worth into Bitcoin and other altcoins, you can do it, but just remember that it remains highly speculative. Will it go down to zero? Absolutely not. Will it continue going up to 100,000? Maybe. Will it stay kind of steady or drop a little bit down to like 20,000 or like 10,000? That's probably the most likely scenario over the long term right now, because we still have so much uncertainty. So I presented you guys all the facts. If you stayed until this point of the video, please like, please comment, please subscribe if you want to see more like this. I'll do my best to keep it coming. And you make your own decisions. Stay safe, stay informed. See you guys in the next one. Bye. So, as I mentioned before, Bitcoin is a beast of its own, and that means it's a decentralized currency. That means there's no one person in control of the currency. Nobody can print more. Nobody can just like magically take a bunch of supply away by like, well, technically they could.